The Mass Fair Plan is really one of 31 solutions countrywide in terms of how this problem is solved or started to be solved, insurance availability. It started back in the 60s. Many of you are old enough to remember the riots, the Watts riots. You remember cities going up, you know, companies started to have some serious doubt about whether they could write in cities, in the urban areas, and make a profit. So they started to pull out. And you'll see some parallels when you hear from Chuck on his side. And so what happened back then is they formed the Hughes Council, and they came up with a solution. And what it basically said was, states have the option, if they want to get riot reinsurance, to form their own fair plans. And 31 so far have done that. And the Massachusetts Fair Plan was put into being in 1968. And basically when we started, we were just an inner city writer. And to this day, we still are an inner city writer. We basically provided basic property insurance, and back then all we did was provide basic fire insurance. Then Commissioner Stone decided to expand during his tenure the fair plans writing to homeowners. And we are one of the few fair plans countrywide that does write homeowners. And I think it has served the Commonwealth well for the simple reason that when we get to, again, the coastal crisis is we're going to discuss, homeowners writings in Massachusetts were already in place. The ability of our company to write basic property homeowners, which is the HO3, we write every form that most companies on the street write. So there is actually very little difference, form-wise, coverage-wise, between what we write and can offer than the normal market companies. The Travelers, the Commerce, any of those companies, our forms are comparable. So in that respect, a consumer is not going to see a drop-off in coverage. What they will see is obviously a difference in the price. So if we move on, I mean, the mission of the Fair Plan, that's sort of the background, is to provide basic property insurance. That's the mandate. The way we're constituted is that every insurance company in this state, in order to get a license, must become a member of our association. So right now there are about 350 insurance companies in the state. They are basically our partner. We write the policy and they back it up. We are constituted, even though we are constituted by law, we are a for-profit partnership. We're not a state agency, and we are run just like an regular insurance company. We accept apps, we underwrite all the risks, we issue them, we pay our losses, we inspect all the property, we maintain all the records. So we function just like any other insurance company on the street. The only difference between us and a regular market, insurance company, is the fact that we do not have a marketing arm. We do not go out and solicit insurance or business. We rely on, and this is one of the things I've said for 30 years, we are basically almost like a pressure tank. When the market shrinks, and like it did starting in 2003, when it contracts, when the regular market doesn't want to write, we grow. And I think that's the safety valve that this state has built in to its insurance marketplace, because since we offer the most popular kind of insurance, homeowners, we are able to absorb those customers and provide them with similar type of coverage. So in respect to coverage, the customer doesn't suffer. And what we've done for 30 years is there's an ebb and flow to our business. When companies find that, you know, they have a better appetite for business, we shrink. And so we've sort of expanded and contracted, just like a pressure tank. One of the nice things about, I think, we sometimes, or people have lost sight of these days, is that we are a statewide company. I mean, till 2003, and within your package you'll see numbers, we were basically an urban market. Back when I first started with the Fair Plan back in 1977, we wrote 500 policies on the Cape. Most of the writings were in the city, and they still are here in the city. That's what we were, and we still are, is an urban market. Even though our penetration on the Cape is, you know, staggering, we still are an urban market. All right, so, I mean, in terms of, you know, our presence, I think, has allowed at least the economy on at least the homeowner's side to continue. The fact that even though the normal market companies pulled out of the Cape, for instance, it didn't affect the ability of people to sell their homes if they could find a buyer in this current market, because banks were willing to lend, because part of the banking mortgage process is to have insurance. And we would write that insurance. We would provide that proof of insurance that's so necessary to get a mortgage. So in terms of that kind of requirement, the economy didn't suffer. In terms of coverage for the people who lost it, again, I stress we were there, and we continued to be there. So this is just sort of, you know, some of the brief history, I mean, of where we started. You can see we started off with just straight dwelling fire, and these days that's reserved for rental insurance. Commercial fire policies, that is so basic a form that we are not even a factor in that kind of writing, because today any kind of business, commercial business, gets some very sophisticated coverages, you know, BOPs, package policies. We're not a factor. Our biggest writings are homeowners, and that's basically why we were, I think, here, because right now we are the biggest writer in the state of Massachusetts in homeowners. We are the market. We didn't want to be the market, but in terms of how the economy is played out, I think, thank God, at least we were there. Because if you go to some other states that don't have a homeowners program, and the same thing that happened on the Cape, I don't know how those people would have got their coverage. I mean, there are other vehicles, and Chuck will discuss them, but at least in this state, other than the aggravation that the agent had to go through of filling out our application, submitting the business to us, going through the inspection process, we were there to replace what he couldn't write through his normal market company. All right? Again, our rates stand on their own. They're not the statute requires that they not be excessive, inadequate, or unfairly discriminatory. We go through a rating process that go through hearings. They're open to the public, and our rates stand on their own. Right now, they are adequate. They're based on our experience, and they are what they are. And right around the room, I see some of the people that listen to
have reviewed that.
They have reviewed that. So, They can testify to that fact. All right? And this is sort of the formula. I won't go into it, but you know, it is the basic rating formula most every company on the street follows, and we go through it. It just happens that we go through it in a lot more extensive fashion because the insurance department and the AG's office are very involved in that to make sure the public is protected. Like any insurance company these days, you know, one of our biggest expenses is we have to buy reinsurance. And reinsurance is basically insurance for insurance companies. And I know, Chuck, are you going to go into?
I wasn't planning to. It would be maybe come up in a discussion.
Yeah, one of the reasons that countrywide companies are pulling back from selected areas is because of this very subject. And the scenario is, it has become so expensive to buy reinsurance that companies make business decisions. For instance, the companies that pulled off on the Cape back in 2003 started looking at their reinsurance cost, i.e. if they had losses, Hurricane 4, Category 4 came up the coast and wiped out the Cape, what would their losses be? And when they started projecting those losses and the amount of reinsurance that they were required to buy to cover those losses, some of them made the business decision and said, geez, I can take and move my business more inland or into another area where it's not as affected by hurricanes, save on the reinsurance cost, and even though I might lose half my business, I'm going to make money because I'm not going to have the same kind of losses or the potential losses. And those are the kinds of business decisions that I think drove the crisis we started with in 2003. And that's the same kind of business decision that's being made all along the coast. You know, from Florida all the way up, more so in Florida because they actually experience some of these losses on a more frequent level. I mean, it shows up in the availability of insurance in some of those states. So, you know, just to throw off a discussion, some of the possible solutions for home availability is adequate pricing. I know that strengthening the building codes is a big thing all the way up the coast. Making homes, especially new construction, hurricane proof, and there are ways to do this when you're building a home that assures that, you know, a home can withstand a good size hurricane. And you know, again, the proper land use management, somewhere along the line, someday, I think we're going to have to all face the piper and say, if you live on the coast, maybe you can't build there, or you can't live there, or if you live there, certain things aren't going to be available to you. And then a potential is a tax-free catastrophe reserve where companies can put aside the reserves tax-free so they can build it up. So in lieu of buying reinsurance, they start having their reserves sit there and they build up that fund to replace the reinsurance they would have bought or part of the reinsurance they would buy. But right now, they can't do it because the tax law doesn't allow for that. And then obviously there's a lot of talk countrywide, I mean, at the federal level on catastrophe reinsurance pools, national and federal backstops. But again, you know, these get into a lot of discussions about why does the guy that lives on the top of the hill in Montana want to be paying in his insurance policy or premium to cover the guy that's sitting on the Cape or the guy that's sitting on the beach in Florida, in his home. So, again, just to reinforce the fact that we still are an urban market. This is how we started. You can see that in the Boston area, we write 70% of Boston District C, A, 50. So you can see that that's
Wait,
how.
could you just stop a moment and tell us what District C and District A are?
Those are different rating territories.
I know, but what are the neighborhoods?
Okay.
District C, again, Joe. District C is Dorchester, certain parts of Roxbury, as well as parts of Mattapan. District A is primarily East Boston and South Boston, and Charlestown,
To Dorchester as
and
well.
parts of Dorchester.
Okay, thank you.
And then you can see that the other urban areas like Lawrence and Bedford, until recently, say 2003, the Barnstable, Duke, Nantucket would have been down more towards the bottom. But when obviously the Cape, when it lost a lot of the major markets, we became that market. And that is what we write on the Cape. We write about 39%. All right?
This is just homeowners policies, not fire.
Right.
Right.
Yeah,
Just
that's
homeowners.
homeowners.
Just the homeowners.
But our fire policies absolutely make no difference in our
Not a
numbers
major
anymore.
factor, right.
And this is what it looks like starting in 1991. I mean, that's the size of the homeowners book back in 1991. Just a little more than 20,000 policies. And you can see slowly but surely it's grown. And right now we've sort of peaked and we're losing business, not as rapidly as we got it, but we're losing it. But still, it was, I think, more than anybody ever thought we would be writing. I always like to say, our maximum limit on homeowners is $1 million. And when I first started, I never thought we would be a market for $1 million risks. But we are. But that's just because of the way inflation has gone and the way construction costs have gone. You know, what used to be maybe a $500,000 risk is $1 million risk today. So it's inflated, but still, we were never designed to write that kind of risk. But that's what we do. All right, and this is sort of the timeline of coastal growth. Like Noni mentioned, it sort of got everybody's attention with Hurricane Andrew. And that's when companies started going back through their book and saying, geez, if that had happened to me, what would my losses look like? And when they started looking at them, I think a lot of people started to panic. And so this is what happened. And the big growth, the big contraction in Massachusetts at least, is 2003. And then it has sort of leveled off. I think everybody's sort of, where they're going to be for a while. And I know that Chuck will discuss that there are some companies that have an appetite, and will it foster other companies to follow suit? But anyways, that's this state's solution, our current solution, to writing insurance when companies don't want to write it. And as I said, it's been around since '68. So it's not something that came around just for the last crisis, and it'll be there, I hope, for the next crisis. So after I'm retired, and enjoying myself somewhere else, these guys will be dealing with you. Anyways, that's it. No.
Great, well, thank you, Jim. Now we have another